Welcome back to another episode of Capital Markets Quickie. I'm your host, Andritzella. Yesterday, we dived deep into the world of recessions. Today, we're shifting our lens to focus on the labor market, which is one of the components to look at as far as recessions are concerned. Today, we're looking at the ever-changing labor market in the United States. There is a lot happening, so let's get right to it. For all the labor economists out there, there is some good news. The US job market is cooling, but not freezing over. Think of it as a Goldilocks scenario. Mark Zandi, the chief economist of Moody's Analytics, perfectly captures this sentiment, describing the labor market as near perfect. He explains, it's resilient but easing. So think of it this way. Last year, the labor market was sprinting, but now it's gearing up for a marathon. I like this analogy myself because I was a sprinter and, well, sometimes you just have to slow down and take a little break. So what about this slowdown? Well, it is certainly welcomed by central bankers and economists who are looking to slow and keep inflation under control. This will ensure that the economy can go the distance. But with every marathon, there are markers and milestones, so here are 5 pivotal ones for the US job market. First, job growth. The US economy added 187,000 jobs in August, and though we're seeing a slight loss in momentum, this is still in line with the average from 2015 to 2019. And second, unemployment dynamics. While the unemployment rate increased slightly to 3.8% in August, this isn't necessarily a bad sign. It seems to reflect more people entering the market rather than job losses. Third, the Great Resignation. This pandemic-era trend saw workers leaving jobs at record rates seeking better opportunities. And honestly, no one can blame them. But it seems this chapter is closing with quit rates returning to pre-pandemic levels. And fourth, job openings. They are still historically high, but they are now showing a trend towards normalization. Fifth and a last point, wage growth. This too is slowing, but here's a silver lining. Real wages, which account for inflation, are finally showing a positive trend after 2 years, and this indicates an improvement in living standards for the average worker. So, as the US labor market transforms, so do the opportunities and challenges it presents. Job seekers might have to put in a bit more effort, but the prospects are still promising. Policymakers and economists, on the other hand, can finally find some peace knowing that inflation might be soon under control. However, guys, it's still too early to pop the champagne bottles. So, that's it for today, guys. Thanks for joining us on this episode of Capital Markets Quickie. Until next time, stay informed and stay resilient. Cheerio.